Hey guys, Mike here. So about what a day on Friday yesterday with Avgo. Man, did you see that move? And I couldn't believe after 1:30 it started picking back up again. And it's the same thing of like, this has momentum, just get behind it. And I'll show you tomorrow where the options market was just driving that thing. And then Tesla was another one. We talked about where they were going to be buying it, and boy did they, and just drove that one up. But again, so that's what's swinging the Qs. SPY basically flat. IWM getting punished again. The 10-year is going crazy. So we'll look at all that tomorrow when we set up the week. But today we get to answer your questions. And we're going to do some autopsies on some healthcare stocks you asked about. And that's exactly what they are, is autopsies. Because don't forget, when Kennedy comes in and starts taking over the FDA and doing all this stuff, we don't know how that's going to affect this sector. Also saw something yesterday about maybe they're thinking about breaking up these insurance companies as far as them owning, like, CVS or these pharmacies or whatever. So we'll have to see how that's going to affect it. Also, talking about the 10-year, it's been a big topic this week. So you guys asked a couple questions about that. Fib levels, some other stuff we're going to talk about in here. So good questions this week. And so we'll go ahead and get right into it. And the first one says, what is the correlation with the 10-year for the new people? Can you explain it? Yes, I can. And the other question was from Dr. Marcus, does the TA for the 10-year really matter since it mainly seems to be a move on news? And my answer is yes to that one, but we'll look in the charts. And here's the thing about the 10-year. And this is the bond market, right? It's talking to us. And the bond market is called smart money, right? They drive everything. And so what they're seeing is strength in all this economic data we're getting, besides manufacturing, which is a mess. The unemployment's holding up, but also they see higher inflation coming. And so when you look at this, I'm just going to read this off and you can see this. I found this from a bond trader here, and it says, the 10-year bond trades off of economic fundamentals and inflation expectations. The economy remains fairly strong, and while inflation is lower, it's still running at 2.3%. The Fed lowering rates should help the economy, but that can be inflationary. Tariffs are definitely inflationary, and one-party government means that there is a little chance that spending is going to be restrained. More government borrowing means more bonds to sell, which means rates need to move higher. No one credible believes that Doge is going to do anything significant, so there really is a great case right now for rates to move lower unless you think the economy is going to slow significantly. That's why in recessions, rates completely tank and TLTs and those kind of bond ETFs do really good. Now, when you look at this, remember, bringing up this, you can do this in TradingView, bring up the United States mortgage rate for the 30-year, right? And check this out. It's almost perfectly correlated. We'll put this the way you can actually see it. And when you look at this is why the 10-year is so powerful. The lending rates are basically based off this, right? Not the Fed funds rate. And so when you look at this right here, the Fed funds rate is what we're borrowing at, right? So you might notice you got these emails about your savings account rate finna go down, okay? But the 10-year is ripping. The funny thing is, look, this is based off a weekly on the 30-year mortgage. You ain't seen it pop yet, right? But they go hand in hand. And so don't be surprised if you start seeing mortgage rates go up as the 10-year continues to rise, as it did on Friday. Again, we talked about small caps. What are they? They're very debt-ridden type companies, have to refinance a lot, have to take out a lot of debt just to keep going. And so when the lending rates are up, it is not good for them. This is why you don't see the Qs going down, right? You see this inverse relationship on IWM and the 10-year. You don't see that on the Qs because it don't matter, right? Microsoft, Apple, all of them have so much money, they don't have to go out and borrow this stuff, right? And plus they make a boatload on the cash they have on hand. And so you can see right here, now we're going to hit that trend line. So we got to figure out. We talked about it. Again, we'll talk about it more in tomorrow's video, but like I said, can you chart it? Heck yeah, you can chart it. I've been charting for 2 years for you guys, saying, well, if we reject here, expect this to happen. We get rejections. Been putting these trend lines in, and again, that's very important, that downward trend line right there, okay? You can see when it gets rejected right there, you got nice moves. That's 6% in 10 days on IWM. You go back and look at a couple others right here. You can see it. There's another rejection. When it rejects, IWM has a very nice move up, because normally when it rejects, it has a pretty fast move down, okay? And so now, whether or not it's just coincidence that news happens to come out to drive the 10-year down when it comes up against that trend line, I'm not going to say that. I find it to be funny, but yeah, I'm not going to say that. But I guarantee if you look at these rejections, there's news that comes out or some kind of economic data. So yes, you can absolutely chart it. I've been doing it, and it seems to work well. So whether it's the news driving it or whether it's the charts driving it, that's a whole different question. Now, next one here says, hey, Mike, can we get a video on healthcare sector charts, specifically Eli and Lilly, that is? And then the next one says, can we get you to look at United Healthcare? And I will look at both of them. Let's do some autopsies here, and we'll just do it together. Here's how I like to do it. Bring up the chart. First thing I'm looking at here on healthcare, XLV divided by SPY. And oh boy, when it's going down like this, not doing good. Not doing good at all. Okay, especially not doing good since the election, because why? Kennedy's supposed to come in and really, shake stuff up. So when it's going down like this, that means healthcare stocks are under a lot of pressure. Can some perform well? Sure. But most of them are under pressure because the whole sector just looks terrible against the S&P. So it's the first thing I'm going to look at. Then what I'm going to do when I pull up these stocks, we'll pull up Eli Lilly first. Oh boy. Okay, so this one right here. I'm going to start going through certain things. I get rid of this right here. You can clearly see I'm going to move this up because that right there is support. That is support that does not need to be lost. Okay, so that's pretty critical right there. So let's start going through some indicators here. We'll start off with our moving averages. What have we lost and all that good stuff? Well, you can clearly see, oh boy, we're below the 200. Not only below the 200, I see a couple rejections off the 200. And when I go back, I also see where the 50's crossing the 200. Now, in the past, that's meant nothing. That's an uptrend, by the way. And I was trying to find a downtrend on this stupid thing. And then I realized when I started to pull out, I'm like, wait a minute. Has Eli Lilly even had a downtrend in a number of years? And when we started to kind of pull out, you see this is clearly on the bigger time frames here, an uptrend. And you can see where 50's crossed 200 a couple times. It didn't mean much at all. It started rebounding. But here, decent downtrend. Could be a topping pattern right there, obviously. And so not so much that the death cross means a lot on this one. It really means a lot more when you're talking about the index and stuff. But just look at that stock. Wow. That's impressive. If you've been holding that the whole time, man, good for you. Now, let's go ahead and start pulling up some other things. We'll go to the daily, and clearly you see 1, 2, 3 times a lady. 3 rejections, really you can call it 4, I guess, of the 200. Well, that's not good. All right, so we definitely got our retest on that one. 50 starting to cross the 200. Now let's go ahead and bring up some more fun stuff and do this autopsy. If we come over here and pull up our volume range, volume profile, oh boy, you can clearly see where you need to hold on to and where you don't need to fall. Right now, we're in that point where you need to hold on to. So it cannot lose right now this shaded area for sure. Because you see what happens if it loses the shaded area? See you later, right? It's going down. And so you can see what happened. Look at the top right there on the right. Do you see what happened when it lost that little volume node at the top when it fell through that gap? That's why it fell so quickly. Okay, so that's why this is a very powerful tool for you to use. VRBP, volume range, volume profile. And it shows you clearly where your support, resistance, all that fun stuff is. And then I'll look at this, I can go, I think I see a trend line here. It goes back to 2023 if I'm not mistaken. And we'll make some adjustments to it. But when you break that right there, and I like my confluence, so when you're looking at this, I'm looking at a trend line plus the 200 and all that fun stuff. But let's just focus on the trend line. Let me adjust this, bang, I need at least 3 touches, and I can plainly see I got more than that. Bang, 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 bing right there. Big time bing right there. Look at that one. Whoo, big pop right there. It came into support and trend line support. Wow. And then when it broke it, retested and failed. And what we know is right in here, we know the 200 is also right there. So I got confluence. All right. So that is not a good thing. Now what we'll do is we'll pull up some momentum indicators and see where we're at on this. So we look at the MACD, RSI, and all that fun stuff. And pull it up, we can see right now on the daily, looks like the bears are still in charge. MACD is below the 0, RSI is below 50 on the weekly, RSI is below 50. And it looks like they're trying to push that MACD below 0, but it looks like it's trying to curl up and not lose that. And so clearly you can see, what do you got to get above here? 200, trend line. I pull up the fibs. Depending on where you want to draw this from, that's a pretty good point right there. Good reaction. If you want to come back down, I'd actually put it right here at the shaded area right there. Better for me. But when you look at this right here, plainly you can see you're in a major discount. That's why you're getting bounces, right? That's why you're getting bounces. And so need to break above the trend line, need to break above 200, guilty until proven innocent. And if you lose the shaded area, I've showed you where you're going to go. Okay, so that's what you got right here when it comes to Eli Lilly. Now, looking over here at UNH, we know the CEO was assassinated. Not very good there, okay? Then you look at it right here. This is plain Jane, what was support, and it fell right through it like a hot knife through butter. Okay, it was support many different times right there. You see a shaded area down below. That is support as well, okay? So, you cannot lose that. So, you have this area right here. Let me go ahead and circle this for you so you can see it. And we're going to go through the same autopsy and look at this thing. Now, again, the X factor will be Kennedy and a lot of these different things. And if they're going to break up and say, hey, you can't own pharmacies and all that good stuff. We don't know what they're going to do there. But if I just go through this, I'm going to pull moving averages up and go, whoa, boy, 50 crossing the 100, then lost the 200. That's not good. Do we have a retest of the 200 yet? I do not see a retest of the 200 yet. So that has not happened, which means we haven't come back up into what used to be support, which now would be resistance. Not quite yet. Hadn't quite reached it. Don't mean you have to, but a lot of times, as you just saw in Eli Lilly, you see that, okay? Take that away, we'll bring up our volume range, volume profile, we'll zoom out a little bit, and you can plainly see why this thing fell so quickly. See that little volume gap to the right over there? Whew, see you later. Where did it stop? Support. Now, so you can see there's a lot of support in this area, which is a good thing for this, unlike Eli Lilly. So, that's why you're getting a bounce right now. If it falls through there, then right in this area between 477, 502, somewhere in there is where you're looking for this thing to hold. If it breaks that, okay, well, we won't even go there, but that would be like 436, 438. Now, we can pull our trusty fibs right here, and we can plainly see, I'm going to take it from that, because that's where you had a big move up, and it's getting a bounce where? At the 0.79 fib. I'm in shock. So let's see if it comes back up into the shaded area, it gets to that golden pocket, gets to what I believe will be the 200, and see if it gets a rejection or not. That is what you were looking for. So you see where it needs to hold, you see where this will be resistance now. So it has to get through this. If it can get through the 200, right, and get through that shaded area and not make it into resistance, well, that's looking pretty good. Then you're just looking for structure and start looking for higher and lows. If you look on Eli Lilly on the daily, you see a higher and low forming, right? And so if that holds, and all of a sudden you start moving up, you're good to go. So that's the healthcare stocks. Hopefully that helps. Now, next question here says, I signed up for the trading view during the Black Friday deal. I understand most of the indicators you discussed, but don't understand the Fibonacci retracement. You're always referring to the 0.5 fib and the golden pocket. Could you please explain this and show how to chart it? Really just 0.5. Golden pocket is 0.618 to 0.65. You have to change that in your fib levels. And also 0.79 just means you're in a discount, right? So when you come up here with Tesla, what I tell everybody, I said, I'm picking this shaded area because that's where the 0.5 fib is. That's where people are probably going to start buying and stuff. And you can see, this is just Friday, by the way. It came down, hit that 0.5 fib, ended up bouncing once, and then ended up bouncing twice, and then just took off after that, okay? These are just popular levels where, truthfully, traders and investors, if you're on a larger time frame, start to come in at. That's just the way it is, okay? And so, again, right there, it bounced again, and boom, away it went. And that's why I put that shade over there, because that was the whole like discount area of the most popular fib. And they're just the most popular fib. Truth is, I'm not a math genius. I just know it works. That's what it's based off of, is math. And so when you look at like Microsoft, for example, I've showed you this many times. You just draw from a high to a low. You pick whatever the low is you want. I tend to like to go where the rally started from. And so that's why I'm picking this. But you can see as it sold down from that top when it set an all-time new high, you can plainly see it's hitting the fibs like tree limbs on the way down, right? And where's it getting bounces at? It's getting bounces at 0.5, 0.618, or so the golden pocket, excuse me, 0.618 to 0.65. The 0.79 is a really, really popular fib, right? And so you can see it came all the way down. It fell right on through. Major selling. Where did it bounce at? 1.272. Comes on back up. Boom. Here we go. Bounces off 1. Comes back up here. Gets support at 0.79. Rejects off the golden pocket. And we go through the same thing over and over. So those levels are just the most popular levels, which I've showed many times that work, right? Whether you're coming down or whether you're going up. And so the best thing to do is YouTube videos, play around with it, and you'll start to see it. Okay, use that replay thing I told you about. If you remember, I just did a video on that. You can see it. Okay, so hopefully that makes sense. The next one here says, why do you often show the chart, for example, of like the NASDAQ 100 futures instead of NASDAQ 100? I show both of them, but the truth is, the only reason I sometimes will show if I'm doing a projection is on the NASDAQ or the NQ, excuse me, is because it's smoother, right? It don't have the gaps. You know, you get small gaps here and there, but because it's running all night from like 6 till like, I think it was at 4:30, 5 o'clock, whatever it is, when they close. And so it's just a smoother chart for me to look at. I get to see what happened overnight, get to see what happened, you know, early in the morning. And so that's why I'll sometimes do that. Plus, the truth is my QQQ chart is just marked up all the heck, and my NQ is not. But again, it just looks smoother to me. It's easier for me to sometimes show you projections and things like that versus if I pull up the QQQ. Again, you got, you know, RTH gaps all over the place, and I don't get to see what happened overnight because it's not running overnight. And so I try to take that into consideration when I'm looking at it to show if there's any big moves overnight. So again, that's the only reason I do that. So hopefully that helped. And now the last one here says, where is the best place to start a retirement stock portfolio? I'm not talking about a retirement as in 401k, Roth IRA, all that fun stuff, but where most investors would have as a secondary investment account. Thank you in advance. And since we're talking about investment and not trading, I say the three most popular have to be Fidelity, Vanguard, and Charles Schwab. So in the comments, put which ones you're talking about. I don't think he's talking about Webull and Robin and all that stuff, but you know, that usually is the top three, so I might be missing one. So again, for you guys who have another opinion, please put it down at the bottom. Feel free to answer any of these questions as well and add to them. I always appreciate it and read them. Feel free to put more questions for next week's video. It's one of my favorite videos to do every week, so I really enjoy it. Appreciate all you guys' support. Please hit the like and subscribe button on the way out. Again, I'll set up tomorrow's video for the week, and we got a busy week because we got FOMC, guys. So buckle up, click, and I'll see you tomorrow. Have a good one.